Hi traders, and welcome to my video on the matching high and matching low candlestick patterns. In this video I'm going to teach you how you can capture moves such as this one for almost 400 pips. So what is the matching high and matching low candlestick pattern? Very simple. What you're looking for are two consecutive candlesticks with a similar high for a matching high, similar low for a matching low. For example, these two here, see these two candles? Similar if not identical high. See the wicks? Almost the same high there. So these are two matching high candlestick patterns. And the contrary, for the matching low, you're going to look for two candlestick patterns with the same or very similar low. Let me see if I can find one for you now. These two here, matching lows, you see, very similar if not identical lows. So that's the matching low candlestick pattern. Keep in mind, this is a 1 hour chart. This is the pound dollar, the GU 1 hour chart. I'm using the MT4 trading platform. You can find these candlestick patterns on any trading instrument, Forex, crypto, stocks, commodities, indices, etc. Any chart time frame, 1 minute, 5 minute, 50 minute, 1 hour, 4 hour, daily, weekly, monthly. It just depends on your own preferences. Personally, I prefer to trade the 1 hour charts and above simply because there's more price data included and thus the signals I find are more reliable. Okay, especially when using the matching high and matching low candlestick patterns. And the reason being, the point of this candlestick pattern is to mark areas of support or resistance. Okay, so let's just take these two matching highs here. So basically, the whole point is that this area where they're matching is going to be an area of resistance, okay? And this is the 1 hour chart, so that's 2 hours worth of resistance. Okay, if this was the 5 minute chart and you had two candles with a matching high, is that resistance going to be more reliable? No, because it's only 10 minutes worth of resistance. Just as if you go up to the 4 hour and the daily and look for matching highs and matching lows, they're going to be a lot more reliable in my opinion because they just contain more price data. If you mark your matching high and matching low on the daily and then went into your intraday charts, you're going to see long-term levels of support and resistance. Okay, just like this resistance we've marked from the matching high here, if you go down to the 1 minute or the 5 minute charts, this is going to look like significant resistance. Okay, just making our life a lot easier by doing it on the 1 hour chart time frame because it's more reliable and it means less time watching charts from my experience. Okay, so that being said, how do we trade the matching high and matching low candlestick patterns? Well, first thing to do is to look for a trend. You probably don't want to trade these in ranging markets. What I would prefer to do is to look for a trend. So we're here, got this resistance level. The market's making lower highs. Nice triple top candlestick formation there. Got this level of support here. Okay. This is the neckline of the triple top candlestick pattern. We can expect a breakout to the downside. That's exactly what we got here. And then obviously lots of traders are watching this setup, and as is evident by that big bearish candle there. Okay, so the matching, if we wanted to get into this trade earlier, we could have considered the matching high candlestick pattern here. So we know that, okay, this resistance is held up. Well, shall we short on the close of the second candle? You could have done so, placed our stop loss above the high of the resistance area, which would have only been around 10 pips. And if we zoom out, that would have been a fantastic trade based on the simple matching high candlestick pattern with over 450 pips of profit potential. Okay. Personally, I would have waited for this breakout here just because I know this is a more significant level of support here. Although it would be interesting if we mark the high of, if we mark those matching highs, you can always look back historically and see, is the level got any significance? And you'll see here it was support, here it was resistance, okay, here it was resistance. So perhaps that is what caused that matching high candlestick formation to form. was that level of support slash resistance historically. Even there, see that? Almost bang on the line, and that's no coincidence, which is why the matching high candlestick pattern is one of the most simple, and the matching low. They're two of the most simple but effective candlestick patterns because they tell you what price is doing based on support and resistance. Okay, and a lot of traders overlook this fact. They want some unicorn magic indicator that's a crystal ball that'll give them 100% winning trades. They don't want to put the effort in drawing support and resistance levels, but knowing candlestick patterns such as the matching high and matching low can just make life so much easier for you. Of course, you can also manually draw your support and resistance lines like I did at the start of the video with this one here, this resistance here, and this support here. We have no fancy indicators. We don't need them. Not for the purpose of this strategy. Anyway, so we zoom back out. We'll use this. So we took the entry either on this breakout or earlier using the matching high. It's a 10 pip stop loss. And yeah, over 400 pips of profit potential. As price dropped here, then reversed, I would have moved the stop loss after the continuation down here. I would have moved the stop loss to here. Okay, I'll just use this as the stop loss. So initial stop loss is here. Move it to here. And after this pullback and continuation to here, then we have another pullback and continuation. I move it to there. Pullback continuation, move it to there. Okay. Pullback continuation, move it to there. So we're basically locking in profit all the way down. So we're maximizing this move as much as possible. Currently, if we had an exit the position, we could be in it for, well, we're looking. We're up 380 odd pips with a 10 pip stop loss. I mean, try catching 380 pips trading the 5-minute charts in the space of 3 weeks. Okay. If you've got a 10 pip take profit on the 5-minute charts, that's 38 consecutive winning trades, not to mention broker fees, spreads, commissions, slippage, etc. Okay, so you can see how powerful price action can be when used correctly. As I said, in a trend, some may argue, well, how did you know this was going to be a trend? Well, the lower highs, consolidation, the breakout, the M pattern, the triple top. There's many different ways we knew that. You know, got even a wedge formation. This level of support here. If you wanted to wait for the trend to break out first, you could have used this level of support as a breakout entry. You can see the pullback came close to it. Could have entered here on the pullback. Here. M formation again. Forms the letter M. See that? Up, down, up, down. It's a support level. It's a big breakout. Traders are watching this. Although I do think that is NFP, non-farms payroll. No, that's this one here. First Friday of the month, causing this big drop here. But yeah, so the matching high. Let's see if there's any more matching highs we can pinpoint on the way down this trend. Here, matching highs here. Okay, this is drawing a pullback. Still, could have been a place to consider a sell trade. Although we do have this level of support, we would have kept an eye on. As you can see, it was tested here. Another matching high around this area as well. See these two here? Okay, matching highs. Again, could have traded on a breakout there. There's a 3 inside down candlestick pattern formation here. Bullish candle followed by a bearish candle, at least 50% of the bullish candle's body, followed by another bearish candle that breaks below the initial candle, all bearish signals. And another reason we may not have jumped straight in on this one, because we can wait for the market to make the lower highs before confirming our trade. Nice wedge formation in the breakout to the downside there. Okay, so it's not just, we don't just take one setup as the gospel. We can confirm with further analysis. But one thing you notice, we haven't got any fancy technical indicators on the chart. I do think they're lagging, they repaint, and they tell you basically what you can see by using the initiative and putting some effort into drawing your own Support and resistance trend lines and learning candlestick patterns. They've been around forever. The unicorn indicator hasn't. Okay. Candlestick patterns have been around forever. They tell you what price is doing, and professional traders use them. They're aware of them. You know, not the crystal ball indicator. Let me know if you've got that one. Okay, so we could have got in on this trend multiple times using the matching high candlestick pattern, right? So one thing I want to clarify is with the matching high and matching low candlestick patterns, they can be used in downtrends and uptrends. The thing is to first establish what direction you're going to trade in. Okay, so we know here we're on this downtrend. Yeah, starting from here, this is our matching high. So with the matching high, we're going to want to trade short to sell using the matching high as a resistance level, because price has bounced off the resistance and is going to head back down. So that's the matching high in a downtrend, right? The matching low in a downtrend, I'm going to try and find one now. This could be a longer video than expected, but no, I spotted one there. So the matching low here, I'll just zoom in on that for you. Matching low again. Okay, nice pullback we've had here. We've got a matching low. So in a downtrend, we're looking to sell. Remember, we have a matching high, matching low. The whole point is to sell. So the matching low is supposed to be a support level. Okay, forming a support level. And you can see from that big breakout, which is the NFP day I mentioned earlier, was an ideal opportunity to get in on this trend on a breakout using a matching low. Okay, so matching high, you're looking for a reversal from resistance. Matching low, you're looking for a breakout of support. Okay, to the downside, obviously, in the sell trend. If we look at an uptrend, let me see if I can find. So this is an uptrend here, right? So we got our matching lows here. Market's making higher lows. What are we looking to do? We're not going to, because we're looking to trade long, to buy. Okay, so we're going to use this as a level of support that the price is bouncing away from. Okay, on a potential buy entry. Now on the matching high, let me just find matching high here somewhere. Roughly these two here, not exact, but this could be considered, okay, short-term resistance. So we can trade the breakout of the matching high there. As you can see, nice pullback, trend commenced, nice pullback, matching high is our resistance level. Trade the breakout, stop loss below the low, 15 pips, relatively tight stop loss for the 1 hour chart time frame, and this was a nice move for over 300 pips. So you could have gone up there and then down here. Matching high, matching low. Okay, simple as that. You can, of course, just trade using support and resistance. So I have a W chart formation there. Okay, resistance breached and then price shoots up. You could have got in on this trend using that entry point. I mean, this is not the purpose of the video. I'm just pointing these things out for you because it would be rude not to. Okay. Resistance level there, breakout. I mean, go back to this W formation here. See that? And then a breakout to the upside. It's just reiterated by the fact, you see that candle there? That hammer candlestick pattern bullish? That just shows that this level was valid. Okay, it was a good level. It was a strong level. I mean, let's see what it did. Well, there you go. You see that? This just emphasizes the importance of support and resistance. Yeah, we knew what price was going to do here because we had marked our lines here. Okay, don't want to end up with too much on the chart where it's cluttered, but you can see this W formation here, which got us into this uptrend. W because, I mean, I'll spell it out for you literally. Because it's a W, the letter W, and the last bit is the breakout. Okay, that was resistance. It became support, and then in this downtrend, look at that. Price pulled back right to that level, would have been a perfect entry. Coincidentally, tied in with our matching low candlestick pattern. So I'm not using any fancy indicators, nothing but price action. I know the chart may look messy to some, but for me, it's the most important information the candlesticks are telling you. Anyway, okay, as always, have good money management. I like to cut losing trades short and let winning trades run, perhaps closing part of the position on the way. Higher chart time frames, more reliable signals from my experience. Bear that in mind as well. Okay. Hopefully you found something useful in this video. I appreciate you watching. If you could please like and subscribe, that would be very helpful, and I can keep making videos that hopefully you can find useful information to implement within your own trading strategies. Thank you for watching, and I'll catch you on the next one.